Hi everyone, welcome back to our bi-weekly webinar session. I hope you can hear me clearly. For those who can't hear me clearly, please type a message in the chat box and so that we'll be aware that you actually can't hear us clearly. Otherwise, I'll take it as we're good to kickstart the session today. So once again, we welcome all of you back here today. And of course, as we are aware, we have David today with us here to speak about the market correction, and is it the end of the crude oil bull market now? Well, I think we are all excited and thrilled to hear from David, but do allow me some time to give a simple introduction of David. You may be already familiar with his name by today because I believe this is not his first time speaking on behalf of Kenanga Futures. Well, David is a full-time trader and managing partner and he of S Trading Group. He also runs a consultancy specializing in providing bespoke trading strategies and coaching for private and corporate clients in the equity and commodity derivative market. So I think we are really fortunate and lucky here today to have David to speak, and we hope that we would be able to learn a lot from him today. But do take note that futures and option trading involves substantial risk due to leverage factor and may not be suitable for all investors. Hence, this webinar is purely and for educational purposes. Kenanga Futures and Yuan Berhad accepts no liability whatsoever for any direct or consequential loss arising from any use of the content of this webinar. So without further ado, I will now pass the floor over to David, as we are all thrilled and excited to see him here with us today. And thank you very much, David, for actually sparing your evening with us today. For those that you are here to do with us right now, if you have any friends that would like to join us, feel free to invite them quickly, as I'll be pasting the link in the chat box shortly. Thank you, and over to you, David.
Thank you, Winmei, for that wonderful introduction, and welcome everyone to this evening's session talking about the WTI crude oil as well as natural gas. Now, this is the second session. We did one session on the 7th of this month as well. And in that session, we also looked at WTI crude oil as well as natural gas and look at the key fundamental drivers of these two current very popular energy products, and also look at how explore ways to trade these two contracts. Now, in this session today, we will add the technical outlook. We go in and look at what is the current momentum, what is the current phase of the market. Okay, is it still on a bull market, or is it, as the title say, gone into a bear market, right? So this is something that has been very interesting, because the crude oil market, you've seen this year made a high, okay, at around 130, and it's corrected until today, right? So a lot of traders and a lot of investors are just wondering, where is this going to stop, or where is this going to continue on to go lower? Okay, so we will attempt to answer these questions and give you an insight of with charts as well, and also going through some of the key drivers as well, because over the last 2 weeks, and 2 weeks in the oil markets and the energy markets is a long time. A lot of things have happened, and even today, Wednesday, the 21st of September, there are two big things that are going to happen, and we will talk about that in the presentation. Okay, so for some of you who have not joined us on the 7th, the session on the 7th, don't worry, we'll run through some of those key drivers as well, because some of these new developments, some of the new data points that have come out, they are already what do you call that, updated into this deck. Okay, so we'll go through that again and see what are the changes in terms of the data and the fundamentals, and then go in and look at the charts, and then of course how to actually take advantage of those movements in the coming weeks. Okay, so let's really move on to it now. I hope everybody is seeing my chart. All right, not chart, actually my slides. Okay, so you should see my cover slide now. So let's move on. Okay, so this is a disclaimer. Ime already briefly told you that this presentation is for general information and educational purposes. If you'd like to take action in any of the ideas that you see here, please talk to your licensed broker, and you can speak to them and they will advise you what to do. All right, that's me. Okay, for those who don't know where I come from, Ime already have told you. Okay, so the last 25 years I've been in the Malaysian listed derivatives industry. I retired to become a full-time trader and also managing my own business currently. Okay, let's move on, not talk too much about myself. Okay, so this is what we are going to cover. We look at technical readings from the standpoint of the current market momentum. What are the potential price directions and scenarios over the upcoming weeks, right? This is something you want to know, right? Is the market going to recover, or the market is going to continue to weaken? Trading CME Group energy contracts. Okay, if you know the trend and you know the price direction, you have an idea of where it is going, then perhaps, okay, you can be able to take advantage of these trends by using CME Group energy contracts. Again, and we will see some of those contracts and how we can use them. All right, let's move in. Now, the question of $200 a barrel oil. Okay, so this is this particular $200 barrel oil first came into discussion or came into talk, okay, during the first part of this year, right, when we saw the crude oil prices starting to explode off last year's what do you call that, correction, okay, and also due to the geopolitical tensions in Ukraine and Russia, okay, things have spiked up until sometime in April. You saw the peak, okay. The peak was actually on 7th of March, where you saw the crude oil WTI reach a price of 130.5, okay. From then, you've seen the prices come down, okay. Right now, we are trading around the 83.61 this morning. This was updated this shortly, but then this today prices have already shot up to 85, 86, right? Due to developments over at the Russian front. Okay, so in terms of looking at those drivers that have brought prices to these kind of heights, okay, are these what do you call that, factors going to continue to drive prices after this sell down? Okay, so these are the key questions to look at. Okay, number one, the decline in Russian oil going exports due to the conflict in Ukraine. Okay, already we are seeing numbers coming out that the recent Russia oil exports have come down. Right. The second one is what is the impact of the EU sanctions on Russia? Right, so they put a cap on prices of energy. All right, so is this going to work, or is this going to make things worse? Okay, on the producer front, U.S. production. Okay, U.S. one of the biggest producers of crude oil. Is U.S. production able to fill in the gaps created by this the decline in Russian oil exports and also from the EU sanctions? Okay, so is U.S. production able to fill this gap? Okay, and the other part of the world, we of course the largest oil producing countries, the OPEC plus. Okay, can the members produce more? Can they boost production, or they are reluctant to, right? There are various factors that are affecting this decision. Later, we'll go in and see what OPEC Plus is doing in the last 2 weeks. And most very important wild card or most important factor now is the geopolitical crisis. Okay, the tensions. Is it going to escalate? Okay, because as you've seen, those who have been following the news, the President Vladimir Putin today has mobilized, okay, what do you call that, the reservists. Okay, so he's upping the ante. A lot of people are commenting that this is some form of escalation. Okay, where is this going to lead to? Right, that's why the crude oil prices jumped because of that announcement. Okay, on fears that things will become more complicated and this Russian-Ukraine conflict will escalate. Okay. The other thing is, of course, we've seen in the last couple of weeks a lot of noises and a lot of things happening in terms of flashpoints in Asia, especially the Taiwan story. Okay, if you have been following what US has been doing and the thought that whether, okay, Taiwan will be a new a flashpoint in terms of geopolitical tensions. So all these factors are going to play out again and continue to play out over the next couple of months, if not for next 1 year, right? So these are the things that will come to question again, right? At this current moment, of course, nobody's talking about $200 oil, okay? But if all these things were to come to a point or peak in terms of their impacts, then we may see prices revisit that high peak of 130, or perhaps even exceed that, right? So that is something that we will try to answer looking at some charts later, whether that is a possibility as well, looking at technical analysis, right? So this is the big question. So let's now go in and look at what are the key fundamental drivers. Okay, for those who have followed the first session, this is a refresh. There's some new data coming in, so we'll relook at some of these key drivers again. So in terms of looking at one of the key drivers for WTI is, of course, the oil inventories. And this evening, Wednesday, later in 2 hours' time, you will have the inventory data coming out from the EIA, right? In terms of the expectations for this evening's data is there'll be a 2 over million built in terms of the inventory, right? So that will add on to the last what do you call that, reported number ending 2nd of September, which actually inventory built as well of 8.84 billion barrels. Right, 8.84 million barrels. That was ending September 2nd. So we're going to see what is the data coming in at the end of last, which is September 9th. Okay, and the 8.84 million barrels build was actually one of the biggest since April. Okay, so that basically corresponds to the weakness in the oil markets as well, reflected when this data came out. All right, but actually, if you look at the previous 3 weeks before September 2nd, there was actually inventories was actually falling, right? But then it started to build, and this evening, so far the consensus is expected build of 2.1 over million barrels for September the 9th. Okay, so we'll see whether the data come up will have any surprises, right? So, but of course, at this current moment, the main driver for this last few hours is the announcement by Putin on his what do you call that, troops, basically putting more troops into the war, right? So this is something that we have to watch tonight. 10:30, the news is the data is going to come out, and let's see whether there are any surprises. Okay, so in terms of the US crude oil production, this figure, some of you have seen this already 2 weeks ago. Okay, these numbers are a bit of a delay because these are official numbers by the US EIA. So currently the numbers are still in June, but in terms of looking at the trend, you can see from 2020 the crude oil production has recovered. Okay, later we'll see in a bit more detail the oil rig counts and all that, right? So as it is, as of June, this is the highest official monthly figure since May 2020. Right, so the EIA expects the trend to continue to be upwards, okay, in terms of the US crude oil production. We move on to the US crude oil rig count. This is important because the number of active rigs which are pumping up oil, okay, will mean that infer that the production is going up or going down, okay. And as of September 16, the numbers, the latest number that came in was actually 599, which was actually an improvement. Okay, it recovered. The previous week, okay, the numbers came in quite bad at 591, right? So 591 was actually the lowest since mid-June. Okay, so that figure, the what do you call that? The number of active oil rigs are able to recover, right? Which augurs well for production. So I think production will still continue to slowly rise. Okay, however, you can see over here in July 31st and August 28th at 605 seems to be the peak. Okay, the rig counts have really struggled to actually go above the 605 number. Okay, so in terms of that, you may infer that even looking at the slope of the the crude oil rig counts, it's actually plateauing, right? So crude oil production could actually be gradually slowing down, although it's slowly rising, but it infers that it's actually plateauing, right? Because the rig counts doesn't seem to be able to break that 605, which is tried twice. All right. So in terms of the latest number, the crude oil rig counts have recovered. It's back very close to the 600 number. Okay, looking at the shale oil production. Okay, so in terms of the EIA, they continue to project increases in terms of the shale oil production, and their latest report came out September 12th. They are looking at a projected rise of 132,000 barrels per day in the month of October, right? So let's see whether these figures will actually turn out, right? There's this 9 million over barrels a day production for October next month. This is what they project, right? So in terms of the DUCs, what are DUCs? Basically, DUCs are the drilled but uncompleted wells. Okay, if you look at the numbers, okay, the latest numbers from the report on September 12th, the DUCs actually declined to 4283 in August, right? This basically reflects the underinvestment due to uncertainties in the oil prices. Okay, so before the COVID-19 situation, in 2019 and 2020, we had very active in terms of the wells being dug for shale production. Okay, but it has really took a dive because the oil prices really had a steep waterfall downwards move, and then a lot of these investments that people put into drilling and fracking and shale production, a lot of them saw their investment actually went to very difficulties. And when oil prices actually recovered, okay, so all those investors were just basically asking for the shareholders were basically asking for their return, right? So there were no really new aggressive investments into drilling. Okay, so perhaps this is reflected in terms of the number of DUCs currently, right? And there are those other factors as well. Even if you wanted to invest in drilling more of these wells, okay, you have this situation of a US labor shortage, okay, the very high cost of production, okay, in terms of materials, okay, the global supply chain obviously did not help in terms of disruptions, the wait time for materials and equipment for the construction of these new wells are also slow to come by and very expensive, right? So this adds on to the currently the prices of the crude oil has come off, right? So this is a bit of a dilemma for those who actually want to invest aggressively into shale production. Okay, so we continue to see these DUC numbers coming off, right? So in terms of OPEC, okay, this is of course a very important factor to look at. Okay, during the time where shale production was at its peak, okay, and US was a net exporter of oil, right? The OPEC factor became took a backseat, but now with the US production not at those levels, then the OPEC factor becomes a very important part in terms of the supply of crude oil into the markets. Okay, so in terms of developments, looking at what has happened on September 5th, which was the latest meeting they had for OPEC Plus, they of course decided to cut production by 100,000 barrels per day for October. Okay, so this is actually basically a signaling in terms of absolute value. 100,000 barrels per day is just a very small cut in terms of the production, right, compared to the big picture, right? But then it's a signaling by OPEC Plus that they are willing to cut prices, perhaps to maintain prices at a certain level, right? So in a sense, they want to keep prices at the current levels or even slightly higher. Okay, so the question is whether there will be more cuts in the future. Okay, so we have to see in the October meetings and the next subsequent meetings whether that will be the trend going forward for OPEC Plus. On September the 13th, they actually published a report, and this monthly report is something that you may want to track as well. Okay, the monthly oil oil market report, which is the MOMR. The September report basically maintains oil demand growth for the previous month at 3.1 barrels. Okay, so basically what they are saying is from their data, the trend looks like there's additional oil required due to fuel switching in terms of the power generation. Right, so we're going into the winter months, so there's a lot of what do you call that, energy required for power generation. So in terms of the OPEC MOMR report, is something that you may want to follow, right, on a monthly basis to see what are the happenings or what are the developments in terms of the OPEC side. Right, so let's move on. Okay, in terms of China, okay, China being the world's largest crude oil importer, okay, these guys, anything that happens to China, of course, will impact global oil demand, right? So in terms of the August imports, okay, for crude oil, there has been an uptick to 9.5 million barrels per day, okay, but lower in terms compared to the previous year, okay. So as you can see from this crude oil, monthly crude oil import chart, okay, so there has been a downtrend since January of this year, okay, the lower highs and lower lows, okay, this uptick the last 2 months, okay, it's not very aggressive, but then it's also in terms of looking at this period of time, the September and October month, customarily there's the peak demand coming in terms of the China, right? So you could expect some upticks over the next 2 months, okay? However, in terms of looking at the yearly oil imports, okay, compared to last year, the numbers in August actually fell 9.4% compared to the previous year. All right, so this is something that is important to look out as well in terms of the largest, the world's largest crude oil importer. Okay, for hints on what is the oil demand. So the question of whether China's oil demand will come back, okay, and will depend, of course, a lot on what is the situation with the zero COVID policy in China, right? Whether there will be more outbreaks, okay? So if outbreaks are going to taper off, and then things are getting back to normal, economic activity in China goes back to normal, then you will see the China oil demand continue to pick up, and that will be, of course, very supportive of the crude oil prices. Okay, so the one of the largest consumer of crude oil is basically not pulling its weight yet at this current moment, right? So what if they come in, that could add in further upside pressure in terms of the crude oil prices, right? Let's move on. So in terms of looking at key drivers, we also have to look at the relationship between the Brent and oil and WTI. WTI is the US oil and the Brent is the North Sea oil. So there is usually the Brent will trade in a premium, okay, will trade higher than WTI, okay. But if the spread gets too big, okay, if a wide spread, and that has happened in the July months, okay, and the spread is currently about 6.85, okay, in July. At one time it peaked around 13. Now, if Brent is so expensive compared to WTI, then there'll be, of course, a demand for US oil in terms of the markets requiring oil. So if US oil is cheaper, there could be open up the extraction for WTI to be imported to those countries that require crude oil, right? So also, because if Brent is very expensive, it'd be a disincentive for Asia to buy Brent oil, right? So this is an important thing to look at as well, the spread. Okay, if the spread becomes too wide, then there is an incentive to buy WTI. So that would be supportive of WTI crude oil prices. Right. In terms of looking at global economy, is of course, if global economy were to grow, then the demand for crude oil and energy will go up, right? So the forecast, of course, by the IMF, and those who have seen these charts 2 weeks ago, the numbers from IMF doesn't look too good, right, in terms of what they see going forward, because of the situation in Russia, the tight global financial conditions. The central banks across the world are raising interest rates that makes it expensive to do business and to get loans and all that. So these are things that have emerged, okay, that could actually finally what do you call that, put a dampener on the global economy, right? So the geopolitical fragmentation as well as one of those things that impede global trade and cooperation is a downer in terms of the global economy growth, right? So in terms of looking at the future, IMF don't have a very rosy picture. In fact, they see the global economy slowing sharply, right? They only see a 3.2% in 2022, okay, and in 2023, the global growth is seen at only at 2.9. Okay, so in terms of that, they still say that these numbers could get worse if things don't turn up well. Okay, so in terms of looking at growth projections, they may. We have to see the next report coming up whether they continue to downgrade the global economy. Right, so they basically feel that the risk to the outlook is overwhelmingly tilted on the downside. Okay, so much so also for World Bank outlook of the global economy doesn't look good as well, right? So they're looking at 2.9% for 2022. Okay, they see that recession is unavoidable. That's what they say. Okay, but the fear is this: the warning that basically World Bank puts up is stagflation. Okay, the fear and the pain of stagflation, because stagflation is what? Stagflation is basically you have stagnant growth but with high prices. Okay, you have inflation at a very high level and you have growth at stagnant or even not growing at all, right? So all this stagflation is an issue that is difficult to solve. Okay, even by the central banks or the Federal Reserve, stagflation is not really or doesn't really have a medicine. Okay, so it can drag on for years. Okay, so that's the fear that the World Bank is flagging in terms of what's ahead for the global economy. Right. So what are the next catalysts, right, in terms of what will impact the crude oil and also natural gas prices, energy in general, is these two big things, okay, stagflation going forward, okay, whether stagflation in terms of sluggish growth and also because you have sluggish growth, eventually it will lead to higher unemployment. People will lose their jobs, okay, and but inflation continue to soar. Okay, so that's a difficult situation to solve. And the other wild card, okay, which really nobody can tell where it's going to go, and things can go ugly very fast. Okay, it's the geopolitical risk. Okay, so already some people who model geopolitical developments are saying that basically things are moving towards World War III. Things are going to escalate. So that's a big question, of course. What will happen if this happens? World War III is going to escalate over the next year or next couple of years, right? So nobody knows. Okay, so this fear of war spreading to other parts of Europe, okay, maybe ignited in Asia due to the Taiwan issues. These are the things that we have to watch very, very closely, right? And of course, if these things will happen, the impact on energy markets are going to be tremendous, right? So those are the what they call that key drivers that are currently running at in the markets and moving the markets. Okay, so for of course for Wednesday today, the big things will be the Federal Reserve. Okay, Federal Reserve, whether they are going to raise interest rates 75 basis points or 1%. That's something that everybody will have to look. And how aggressive is the Federal Reserve going to do? If they're very aggressive, of course they have a dampener on crude oil prices, right? And also in terms of looking at the EIA data coming out later this evening, right? So those are the fundamental drivers. Okay, natural gas. Okay, so let's go in and also have some look at natural gas drivers. Okay, so basically this is a chart of the natural gas futures, right? Henry Hub natural gas futures, which is a contract traded on CME. This is a weekly chart. Okay, we saw basically prices peaked and then have come off. Okay, of course after the sell down, it managed to peak again, and then currently it's around the 780 MMBTU per MMBTU. Okay, 780 is the current price. So whether it will recover or it's going to go down next. Okay, so that we will look at the technical charts and see later what is going to happen to natural gas. All right. So in terms of natural gas, also you look at inventories, right? So in terms of the week ending September the 2nd, inventories basically rose. Okay. But one thing to note is at this during this current time, okay, September, October, moving towards mid-November, it's customarily you see a build in the natural gas inventories. Okay, so this could be a seasonal effect. Okay, because you can see the chart over here. Okay, in terms of there's a build, and then towards the winter month, the stocks are depleted. Okay, people use it for heating and all that, and then towards summer there is a build again. Okay, so this is a cyclical. In terms of looking at the trends of the gas inventories, there is a cyclical effect. Okay, so in terms of build over the next couple of weeks, a build in terms of the natural gas is not unexpected. Okay, if it suddenly you get a huge draw, then something is a bit different in terms of the normal movements in the inventories for gas. Okay, so this is something that I want to point out to you in terms of you see it also in the charts over here. All right. So, but having looked at the inventory build and take this now, you can see that in terms of the 5-year averages, the current inventory is actually 12% below the 5-year average. Okay, in terms of the August numbers, right? So this dark line in 2022, this shortened line here, this is the 2022 numbers, is actually towards the lower band. Okay, and this is actually below the 5-year average. Okay, the lighter blue line is the 5-year average. Is currently, as you can see, from the beginning of the 3rd week of this year, it has been staying below the 5-year average. Okay, so in terms of the actual numbers, the natural gas inventories in August ended at 2.7 trillion cubic feet. Okay, so again, it's 12% below average, right? And it stayed below 5-year averages for the most of this year. Okay, one thing which is interesting to note is the Europe and Asia demand. Okay, the international shortage. Those of you who have been following the news, of course, looking at the Europe side in Germany and how gas prices increase across even in the UK and all across Europe. Okay, and one of that is of course the prices in terms of the European Eurozone is reflected by this TTF. Okay. TTF, what is TTF? TTF is the title transfer facility. This hub in Netherlands is where the benchmark prices of natural gas is what do you call that, recorded. Okay, so basically in terms of the Euro gas prices, it's about 99 MMBTU in late August, right, according to the report by EIA. So you can see the TTF in yellow over here, and compared to the Henry Hub, okay, which the natural gas in the US, you see the prices are so much different, right? Then the spread is so huge between what's happening in terms of the gas prices in Europe and also the gas prices as compared to the gas prices in the US. Okay. Also, you can see a big difference as well in East Asia, and that's measured by what you call the Japan Korea. The JK, the Japan Korea measure, which is the brown line here. Also, you can see the spread widening as well. Okay, so these are the reality which is happening in Europe. Okay, so such a huge difference. Now, if the Russia is going to, of course, turn off the gas to Europe side. So where do they get the gas, right? So you probably see upward pressure moving in terms of the Henry Hub natural gas, because prices here still has a large gap compared to what are the US prices in terms of the natural gas. Okay, so you may likely to see upward pressure as Europe tries to get more gas from the world, and it's likely that in terms of that, you will see the US natural gas demand going up because of that. Okay, so that's the quick look at the drivers. Now we're going to go in and look at the technical outlook for crude oil and natural gas. Okay, so this is a weekly chart of crude oil, all right, and we are going to look at we're going to analyze the prices using the Elliott wave analysis, right? So for those who are not familiar with the Elliott wave analysis, basically the Elliott wave analysis is looking in terms of the trend of the market. Okay, what trend is this currently at? Okay, and if let's say for example, if it is in a bull trend, then there'll be a series of 5 wave upwards. Okay, so currently what you're looking at, what you're observing right in front of you now is a weekly chart with an uptrend. Of course, you've seen over the last couple of years, the last 2 years, the oil prices recovered from its low and have been moving upwards. Okay, so at what stage of this bull trend is the weekly chart currently showing? Okay, so what we are seeing in terms of the count, okay, and this is the third wave peak at 130, and now what it is the current phase is actually on what we call a fourth wave correction. Okay, and in terms of the calculation for the fourth wave correction, it usually is calculated to land around this zone we can see is in pink. Okay, so it's like highlighted in pink. This is the zone that the fourth wave correction is expected to land and end. Okay, before doing a wave upwards. Okay, so in terms of looking at Elliott wave analysis, okay, for an uptrend, okay, for a bull trend, there's supposed to be the 5 waves, and the 5th wave is supposed to be the last up wave for this particular commodity or any commodity in terms of the bull movement. Okay, so we've come to a very important support zone. Right, this is where wave 4 is supposed to land and supposed to from there recover and then do the wave 5. Okay, what is a wave 5? The wave 5 expectations is the wave 5 will exceed the wave 3 high. Okay, by the rules of Elliott wave analysis, this wave 5 will take out the 130 price. Okay, right over here if it gains enough strength. Okay, so the thing about this is the fourth wave correction. Okay, if it goes too deep, right? For example, if you already exceed this zone, okay, then you will have exhausted its energy to do a new climb upwards above 130. Okay, so right now it is at a very important support zone. Okay, so the last low, which was elected at 81.2, okay, this very recently. Okay, if this managed to hold, this could be the very important low where the crude oil prices are going to recover, and then if it can gain enough momentum and strength, break through the 130 high. Okay, so this is something that we are looking at. Okay, we are now at the base, a very important base. Not to say that the wave 4 may not still come down. Yes, there's a possibility at the bottom of this zone is 70, the price of 70. Okay, the zone is actually between 70 and 85. Okay, so if elected a low at 81.2, we will see whether this very important low 81.2 can hold. Okay, currently there's an assault this week, but it never touched that levels. Now with the new developments in Russia, okay, we're seeing prices picking up. Okay, so now it's a very important thing to do later. We'll see in the daily chart what are the price points that it's supposed to take out before you can see the trend resuming on the upward side. All right, so that we will go in and look at the daily chart, and later we'll also go into the live chart and look at the shorter term charts and see what is the trend looking like. Okay, so in terms of the weekly chart, there is a possibility of a 5th wave. Okay, once the wave 4 completes, currently we're seeing a possibility of that happening. Okay, and if the strength of the 5th wave is able to take up the 130, then you are looking at the possibility of what we saw in the first few slides. Okay, is it going to go to 200? So this move may be the one that will take it there. Okay, so we'll have to see. So that's what the weekly chart says. Let's move on to the daily chart and see what that says. Okay, so in terms of the daily chart, okay, so the oil bear, so in terms of the drop in prices, okay, it's been happening since it peaked in March. Okay, so we've seen that the fall. Okay, so the bears were in control since March. Okay, so now in September, okay, what are we seeing? All right. So in terms of the charts, okay, we are basically looking at the possibility of ABC. Okay, what is ABC? ABC is a corrective wave. Okay, after which markets could take off from there. And what's giving hints towards whether the market is going to have a technical rebound? We see over here the momentum. If you follow my cursor down to the bottom section, you'll see a momentum indicator, and you will see that as prices continue to go lower, okay, since July, the prices or the momentum is not actually going lower, which means to say that the strength of the selling, okay, towards these last 3 months have not been actually accelerating very much. Okay, so you can see actually momentum continue to rise, and this phenomenon is called the bullish divergence in technical analysis, which basically is pointing to a possibility of the markets are going to end the downtrend at this current levels. Okay, so this is a classic sign, okay, of a market reversal is possible at these levels. Okay, so in terms of the, it has played out already, okay, and the momentum indicators are basically giving hints that it's possible that this 81.2 will hold. Okay, if it holds, then we will see the next impulsive wave upwards, okay, or at least the start of the impulsive wave upwards. All right, so this is what is suggested by the daily charts in terms of the WTI. Okay, so both the weekly chart and both the daily charts are showing up possibilities of it rebounding from these prices. Okay, so unless it takes out the 81.20, then the 81.20 will be a very important bottom to look at. Right, so that's the wave and the momentum phase for WTI in terms of the weekly and daily chart. Later we'll go into the shorter term charts to look at the very short term developments. Okay, so now let's move on to look at the natural gas. Yes, okay, so natural gas has actually gone up to a very recent high, okay, and this high was at $10 per MMBTU. Now $10, this is actually a very steep increase in terms of looking at where natural gas prices have been. Okay, so in terms of the bullish wave, okay, the third wave of course is the most aggressive wave. Okay, so now we've seen the momentum coming down, as you can see right over at the bottom panel here, right, basically suggesting that this third wave may have peaked over here, okay, may have formed a very important top at this $10, also the psychological resistance, okay, and may be moving down towards the wave 4 target zone. Okay, in fact, prices have been trading and moving into this box already, right? So this is a bearish wave expected. Okay, so we could see consolidation continue to carry on, okay, as the momentum continue to go down. Okay, so if the momentum actually moves below zero, then it is confirming that the fourth wave consolidation is confirmed, and then we are looking for a possible bottom. Okay, now what does this say in terms of the weekly chart? Okay, it's at the third wave. Okay, what does that mean? That means there's a possibility of a fifth wave. Okay, so after the fourth wave consolidation, okay, after that completes, then there is a possibility to see what do you call that, gas prices go above 10, right? So that's what basically the Elliott wave count says. If 3 is already completed, we're looking at a fourth wave correction, and then one more final wave for the weekly chart bull trend, right? So that is a possibility we will have to see, because this bearish wave 4 sequence could actually see prices come down and challenging targets at the 678 and 754 levels. Okay, and if it goes even deeper, maybe even come to the 550 levels. So this is something that we have to watch. How deep could this correction come down? All right, so let's go in and look at the daily chart. Now, this is what the daily chart. So the daily chart has done a very classic 5 wave, okay, in terms of the daily chart upward move. Okay, so now it is in what we call the ABC corrective mode. Okay, so after 5 waves up, then we have this three-wave correction coming down. Okay, so the fifth wave, of course, showed the final bull phase. It didn't really have much strength to go very much above the third wave, because you saw after the third wave, the fourth wave came down very steeply, which basically sapped all the energy, all the momentum of the wave. So the next climb was quite a tough climb for the fifth wave to get up over here, right? So it didn't really actually manage to exceed the wave 3 high by very much. Okay, so it did a peak at the psychological resistance of 10, and from there, of course, you saw the prices coming down. Okay, so what we are probably currently looking at and witnessing is the ABC corrective wave. Right, so we could have finished A wave down, and currently looking at B wave. We have to see, right? This A wave may continue to go down. Okay, so that's why the B is with a question mark, whether there is but we can possibly see during the B wave an upward move, okay, towards maybe 850 before the last wave down to C. Okay, and even the deep ABC correction noted here is it could even test crucial supports at the 550 levels. Okay, so it is possible when you see these ABC corrections or this corrective mode, it is possible to revisit the wave 4 lows. All right, so this is something basically in terms of the daily chart, the view is a bit bearish for next couple of weeks. All right, so later we'll go in and look at the intraday charts. Okay, so having seen the possibilities of crude oil having a reversal upwards, and then in terms of the natural gas, looks like the bears are in play. Okay, let's see how we can trade these possible price scenarios, right? So we'll go in and look at the available trading opportunities using CME energy contracts. Okay, so we look at some of the crude oil and natural gas futures contracts. Okay, so the main contract that's traded in terms of the US crude oil is the contract called CL, the code CL, which is the WTI crude oil futures. This is the benchmark crude oil contract for US oil in the world, and this is the most actively traded futures contracts in terms of crude oil in the world. Okay, so WTI stands for West Texas Intermediate light sweet crude oil, okay, which is the hub is stored and distributed in Cushing, Oklahoma. All right, so this is where the global benchmark for futures contracts or oil prices. This is where people look at the prices, where US oil prices going at. They will look at WTI. Okay, this is a benchmark. Okay, of course, a lot of users, different users, and a lot of it of the players are commercial players involved in the oil industry. They go in and hedge prices, whether upside or downside. This is the very most widely used contract for hedging against adverse oil prices. Okay, of course, speculators like us, individuals like us, will go in and trade. Okay, and I used to trade this contract. It's used to be my favorite contract, but now there's a new favorite. Okay, I used to trade this contract, and it's one famous my favorite what do you call that, crude oil contract. Okay, you can see right year to date it trades about 869 contracts a day, right? So very, very active. So a contract on CL represents 1,000 barrels of oil. So if you buy or sell one contract of CL, right, you're basically buying and selling 1,000 barrels of oil. Right, so every single $1 move in this contract, of course, it has to be multiplied by 1,000. Okay, but the minimum move is 0.01 cent US cent, which is $10. Okay, but the easy way to remember is this: since it's a 1,000 contract, a 1,000 barrel contract, every $1 move on this contract will mean a $1,000 move in your account. Okay, if you are trading this contract, right? Trades almost 24 hours. Okay, every single day, right? And then just note that this is the margin required to trade. Okay, this is the deposit or the margin required by the exchange trade 8,006. But the brokers may have a different number on this, so do talk to Kenanga Futures when you're trading this contract. What is the margin required for WTI? Right, so this is WTI, the big brother. Okay, I want to introduce you to the younger brother and the smaller brother, which a lot of traders are finding a lot of favor, right? And that is the micro WTI, okay, which is only 1/10 the size of the big brother. Okay, the benchmark WTI is 1,000 barrels. The micro is only 1/10, which is it's 100. Okay, and this micro WTI is one of the fastest growing energy products today, right? And over in May, okay, when they were reporting the numbers, it has already traded close to 20 million contracts since its launch. Okay, and interestingly, nearly 40% of the volume is actually traded outside of the US. Okay, so this is very interesting. Okay, so what this contract has done, the micro WTI, or the MCL for short, okay, the code is MCL. MCL has given the opportunity for other types of traders, including us, the individual traders. That's why I say it's now my new favorite. Okay, to be able to participate. Okay, gives you a lot of flexibility because of the smaller size, right? You could trade multiple contracts, able to position size and all that, rather than trade the big brother. Okay, and also because of the affordability. Okay, so if you look at the contract specs or the micro WTI, okay, 100 barrels, look at the contract requirements to trade one contract. It's only 860. Right, so $860 to trade this contract. So relatively 10 times smaller in terms of the margin requirements to trade this contract. Okay, so a lot of traders find this very attractive. They can do more position sizing, vary their sizes. Okay, of course, more affordable. Okay, and it has reached out to a lot of traders, including during the Asian hours. Asian hours trading for the micro WTI, the MCL, has a large contribution. Okay, at this current moment, it trades about 126,000 contracts a day. So very active. Okay, so check out again the final the margin required by Kenanga Futures, right? The exchange clearing house of CME requires 860, but the margins may differ slightly with Kenanga Futures. Right, so compare all the other contracts on crude oil. Okay, there's another contract called the E-mini. Right, the E-mini is also smaller than the big brother by half, 500 barrels. Okay, but kind of if you want to trade that, okay, micro WTI was actually launched last year. Okay, you see so many active traders trading it. 100 barrels, of course, is easier to calculate in that sense. So the the MCL has, in terms of volume, okay, been more popular, all right, because it's more intuitive to calculate the P&L. Okay, 100 and 1,000 is easier. Okay, this is like a dollar value. One tick is $1 per contract. This $10 per contract, easier. Okay, this one like 12.5, maybe a bit difficult for you to calculate, right? So MCL is one of the favorite among the individual traders in terms of trading the crude oil, right? In terms of affordability, flexibility, and the contract size. All right, so let's talk about Henry Hub, okay? Since we already seen the Henry Hub possible movements, okay? So Henry Hub, in terms of, this is the third largest physical commodity futures contract in the world. Okay, don't play, yeah. Henry Hub natural gas is very, very active, but this is a very large contract, I must admit. Okay, it's 10,000 MMBTU contract. So this is a large contract, as you can see, reflected by the margins that are required to trade this contract, 12,400. Okay, because it's also very volatile, right? The volatility has a factor in terms of the margin required to trade that particular contract, right? So in terms of those who are a bit more moneyed and love the natural gas, movements, okay, so you can actually trade this, but it will require more margins, right? So this is basically, in terms of minimum tick, is 3 decimal points of $1. Okay, per MMBTU, so each tick is worth $10 because it's 10,000 MMBTU contract. Okay, very, very active though, in terms of a very deep liquid market. Okay, nearly 24 hours trading and 353,000 contracts traded every single day, right? But of course, natural gas is a huge global commodity. That's why there's so much activity in this particular contract, right? So just to give you an example, before we go to live charts and going to questions, remember to type in your questions in the chat box and we will take the questions. Any questions you'd like to ask about the crude oil trading, natural gas, just put it in the chat box and we'll take it after this presentation. Okay, so this one is a quick look at the calculation of P&L for if you're buying and selling the crude oil markets. So this one is based on the trading of a MCL, okay, the micro WTI. If you're looking, perhaps you feel that from here what do you call that, markets can recover, you're bullish, okay, perhaps, okay, this is an example. Of course, the real prices are not 100 now, but just to give you an example, easier for you to calculate, okay. Say you buy one October contract of the MCL, okay, and trading at 100. So as you remember, each MCL is 100 barrels of crude oil. So every $1 move will be $100 move, right? So let's say, for example, you bought one contract of October MCL and it rises to 102. You bought at 100 and now it's 102. So you have a profit of $2 per barrel, okay? And since it's a 100 barrel contract, you have a gain of 2 multiplied by 100 barrels, which is $200. Okay. Now, of course, if prices were to come down to 98, then you have a loss of $2, and correspondingly, of course, you have a $200 loss in your account. Okay, so in terms of calculating the P&L, it's actually quite simple. Okay, just multiply the movement of the oil prices multiplied by 100, because the MCL is a 100 barrel contract. Right now, if you're bearish, you're still bearish on MCL, you could of course go in and sell the market. Okay, one of the advantages of trading futures is you can trade a bearish market as well. So if you are bearish, so for example over here you sell MCL at 100, okay, and MCL actually drops to 98, then you have a $2 profit per barrel, which gives you a $200 profit, okay, if prices go down. But if you're shorting the market and market goes up, say it goes up to 102, then if you're shorted and market goes up, of course you have a loss. Okay, at 102 you have a $2 loss multiplied by 100 barrels, you have a $200 loss. Okay, so it's quite simple to calculate the P&Ls for trading crude oil or even other contracts. Right, so it is basically multiplied by the contract size. All right, so now I'm going to okay, before I move to live charts, okay, just want to show you this particular newsletter, which you can what do you call that, subscribe. Okay, you may scan this, or you can go to Fresh from the Trading Room. Okay, every month it comes up twice. These are a good expert analysis newsletter where you can get trading ideas, okay, on crude oil and other contracts as well. Okay, so I recommend if you can go in and subscribe to this so that you have some idea of where the oil markets are going and even other markets, and these ideas are tradable ideas. All right, so now let me move on to live chat ups. I'm gonna change the screen. Okay, show you my. Okay, I'm gonna show you my browser. Okay, let it load for a while. You will see we'll see the crude oil futures chart. I hope you're seeing this now. All right.
Yes, we can see it, David. We can.
Thank
you,
Email, for thank you for confirming over there. All right. So basically, you can see this downtrend. This is a daily chart. Okay. So what we are saying that just now about the what do you call that, the divergences. Okay. So these are the divergences. Okay. So possibility of markets rebounding. Sorry about that. Rebounding from this area. Okay, so these are the divergences. Okay, so the key point, I think you have to look, the key prices will be this prices over here. Okay, so let me just this price over here. Okay, so this price at 90. Okay, so if prices can continue to what do you call that, defend the low at 81.2 and then take out the $90. So this $90 price, okay, if it does not break the 81.2 and it takes out 90, then you could see possibility of it emerging as a new impulsive wave upwards. Okay, if I take down and let you have a look at the hourly chart, let's see what's the hourly chart saying. Okay, this is a short-term chart. The hourly chart will basically tell you the trend over the next couple of next 2 days, excuse me, the next 2 days. Okay, so in terms of looking at the hourly chart, you could see that it started somewhat of a higher high, higher low, higher high. So the shorter term charts seem to be rather bullish. Okay, so tonight we'll see how the numbers on the EIA come out, how the inventory numbers. Okay, if it's numbers coming with inventory draw, then you may see the prices continue to move up. Okay, but what is currently pushing the markets are the geopolitical developments in Russia and Ukraine. Okay, that's why you see prices picked up over this last few hours. Okay, so we have CEIA, we have to see the Federal Reserve decision that will give you the direction for the next couple of days. Okay, but as it is, the technicals are showing a possibility of a upward channel. Okay, so we have an upward channel over here. So for the shorter term, over the next 2 days, you may see the prices being quite supportive as the chart is showing now. Okay, let's see natural gas. Okay, meantime, get ready your questions. Okay, so we can take questions from there, but let's have a look at natural gas. Okay, natural gas. This is a weekly chart. Okay, weekly chart, we're still looking at the wave 4 target zones. Let's move in and look at, okay, maybe I should just click it over here. Natural gas energy. Okay, so we now display the hourly. Okay, so even in the natural gas, there seem to be a short-term impulsive wave upwards. Okay, so we've seen a bit of a bullish convergence over here for the daily chart. So you see the prices coming down, but momentum going up. So basically, when you see this kind of formation, right, so you can expect prices to do a technical correction upwards, and that's what is being displayed currently, right? Possibly also due to the geopolitical developments in Russia, the gas prices of course are influenced by those developments as well, thereby moving upwards. Okay, so any questions that coming in, I'll pass back currently to Yinmei and see what are the questions we can answer. I'll leave the screen at this page so that if you ask any questions on technicals, we can go straight to it.